Good morning, guys. Welcome to this Thursday, April 24th. And market is pretty much holding on to the little gap up we had going into yesterday's trading. It did probe the gap here in the overnight and didn't take it out, but it definitely probed to the downside and backed off a little bit. But so far, we're kind of right in that little twilight zone where we'll see if they are going to try to close the gap completely, or you're going to see some little bit of recovery. But yesterday's a nice little rally that got completely reversed yesterday, and then we had overnight pretty much as I said, we started off. I believe we said if they closed above that mean here, then we would start off range bound. Otherwise, we'd had the bias to the downside, and so far the bias to the downside in the overnight has pretty much been holding on, holding true, and we'll see if they can show a little bit of strength. I'm not sure what that'll pop here was at 740. And anyone and any headline can come out in the middle of anything, create a reaction, and that's the biggest threat we have. A headline comes out, you're not prepared for it, and suddenly you find yourself in the middle of a trade which is not working out at all. Anyway, so we have stuff coming out this morning news-wise. It's Thursday. We have durable goods, jobless claims, Chicago Fed coming out at 8:30. Existing home sales at 10, nat gas report at 10:30, and a 7-year auction at 1. So that's what we got going in today's trade when it comes to news for today. The first news, durable goods, I think probably the pretty important number to pay attention to. Jobless claims, we'll see if that comes up. It has been stubbornly low, hasn't moved a whole lot at all. So interesting fact that the job market still seems to be holding on pretty darn good. So we'll see. By the way, at 11 o'clock, we also get a Kansas City Fed manufacturing index. I missed that one. So 8:30. 10, 10:30, 11 had that Kansas report, and then at 1 o'clock we get a 7-year auction. So that's what we got to work with when it comes to news. Looking at the market and what we think that's going to do today. Here's your gap. We're halfway through the gap at this point. It probed pretty good in the overnight, backed off a little bit. So it's anyone's guess right now if they're going to be able to take this lower. I'm going to start off with a range bound at this point. We are holding above that 53.40 level. That was the ledge I was talking about before. I wanted to get up above the 5300s. I believe that's what we were really paying attention to. So 5300 here, the mode or the mean from that prior distribution up to this gap up at 5330. If they can hold above this area, I think we're having good shot at potentially taking this back up again. It's so that's going to be the question for the trading this morning. Are they going to try to retrace this further back below the 5300s, or are we going to be able to hold on to this and maybe even make it go back out into the 5400 levels? And remember, we were way up in the 6,000 levels for a bit here, so it's we are way down here when it comes to the index, and getting up above this area, the 54.95 to 5500s, and start retracing these prints above 5500. That would be a key area to take out. And when that happens, I think we may have a shot at the market turning, the capital flow turning. But at this, as long as the resistance up here at the 5500 holds, I think the market is going to stay in a range, in a pretty big range at that. So maybe we have the lower end of the range, it tapers off all the way down here to the 5,000, down to the 4,800s. And the upper end of the range is right here, between 5,000 and 5,500 is where the range has been. So a 500-point range right now is the market is going back and forth in. And it's not very comfortable at all. I mean, it's trading-wise, it works fine, but looking at 401k stuff, it's not pretty at all. So we are waiting with bated breath for the market to be able to take out this upper the 5,500 level and start trading higher. That's going to be a key area of resistance. So in the meantime, we were up here pretty hard, not quite up here testing the 5,500, just shy of it. Backed off pretty good in the overnight gap test, and this could set up a nice long trade for a retracement back up again. If they take out the gap and take out the 5300s, I would be back on the back looking for moves to the downside again, see if they can run it down to that lower edge at 5,000 again. So starting off range bound, modestly optimistic that we may see some strength developing here, but I'm not going to start. I'm not going to start with a bias one way or the other. Yesterday's move to the upside was pretty spectacular, but the fact that they has completely reversed it kind of took off that long bias feel out of it. So starting off range bound, if this starts trading above the 54.20s, I'm going to start thinking about the long side again. If this starts trading below that 53.55s, I'm going to look for that for a complete closure of that gap, maybe lower. So we have a pretty good overnight to work with. So initially, looking for short opportunities against the 53.95s, 54.10s, 54.20s for rotations back down. And then looking to buy against support 53.85s, 53.78 to 80s, 53.65s, and the 55s for rotations back up again. So then let's see how the market really feels about the directional move here today. News-wise, some of this news could move the market for sure, but it's nothing which I would expect like a massive directional reaction on, but it could certainly set the stage and set off a direction. So if you watch them take out the 54.20s on the upside, start thinking about the long side, look for confirmation above the 54.30s. And on the way down, if they start challenging the 53.55s, start thinking about the short side. If they take out that 53.40s, well, I will actually just below 55, I would start on the short side. At that point, I think they're heading down to that 40. The reverse retest on that 53.40 area could be a nice long setup, a gap closure trade. They run it down, they close the gap, and then basically you have a shot where they can trade back up again. So that's how we get started on the ES. Not anything obvious when it comes to direction. The gap up we have yesterday, as I said, was a pretty good move, and so far they haven't quite retraced back down again. So maybe we have a shot at potentially the long side building up here, but I'm not going to count on that. They could just as well start retracing this gap and go head back down to the 40s, maybe even below that. So, and then we'll see that. I mean, if they start taking out that 53.55 area. Below the 53.65, I think is a stronger edge. So this one should not be that super strong, but if they take out that one as well, just look for a complete gap closure and stay on the short side of the market at that point. And then on the way up, if they start taking out that upper level, the 54.20s, start thinking about the long side. You have confirmation if they take out the 30s, 54.30s. So if looking for shorts against the 95s, 54.10s, 54.20s. I'm going to buy against the 53.85s, 78 to 80s, 65s down to the 55s for rotations back up again. Then we'll see if you're going to get a directional move building or more just back and forth. All right, back take a look at the bonds and the NASDAQ. And the bond market is not having a major directional move at all. So that's okay. So overnight, yesterday's trading was the same, back up and down. A little bit roller coaster on that one. But looking at the, let me see, I can get there's my capital flow. As you can see, we are back here to that attractor area at the 114, 114.15 area. So they're right back down there again, going sideways. So I would start off range bound on the bonds. They held the support there on their way down here the other day, so that's a good sign. And I would just watch it as a range bound market. Look to sell strength, 24s, 15s, 1505s. I'm going to buy weakness. Probably start at the 1412s, 1407s, down to the 114s. So if they start heading down below 114s, or they start taking off above the 115s, maybe even the 115.10s is a better area. There's a nice ledge there. So above 115.10s, start thinking about the directional move on the bond market. Otherwise, I would just look at range bound trading in this range. So that's the bond market to get started. NASDAQ is the one I keep hoping for. Big tech leading us higher. Some of those are knocked down like crazy, and those companies, they've been down like 30%, some of them. And with drawdowns like that on big companies, that's a buying opportunity. So I'm counting on those to start getting picked up and start some net buying going on in those, and that could certainly help the Nasdaq and the general market. So that's kind of the one I'm thinking when it comes to these big techs. So again, they're getting disproportionate. It was a crowded trade going into this. Everyone has those stocks, so a lot of people, institutions which sold their positions or dropped them down, is what's been driving this downside. But it's the companies hasn't quite changed. Nothing is fundamentally changes in those companies because of what's going on. So the valuation wise, now they're very cheap. So there you have it. So looking to same story there, looking for range bound trading to get started. Watch that upper area, the 880s. Confirmation about 920s for rotations back up. I think they may be even at the 960 before you really start getting confirmation on the Nasdaq. But if they start taking out that London high at the 870s, they definitely start leaning in on the long side. If they start taking out the 920s, I would just stay on the long side at that point. But initially, we're looking for short setups against the 830s and the 870s for rotations back down. And then we're looking to buy against support 770, 740. I would probably hold out a little bit until we get down to the 700s, 670s, 630s, and the 600s here for rotations back up. So I think those lower areas are probably the better ones. In the middle of the slope here, not sure how strong the edges are. They do correspond to some edges back here on this side, but I would just be a little bit cautious about those edges, how strong they really are. So I think the better edge here is probably the 730s. This edge, the 700, maybe not so strong, but they can still hold. So that's why I have them on there. So looking to the buy weakness, 770, 740, 700, 660, 70, 630s down to the 580 to 90s for rotations back up. So we'll see if the Nasdaq can make a go out of this and show us a little bit of love here, but we'll see. It's they probed down in the gap. They haven't quite closed it, but Nasdaq has, I think, the better shot at trading back up again. So we'll see. So that's kind of what the capital flow looks like. They probed down here in this little gap, but not quite gap closure. So we'll see if the overnight can hold on again. But as you saw yesterday, the overnight was way up there, and the day session just knocked it straight back down again. So starting off range bound on the ES and Nasdaq, let's see what kind of direction we get, and we know when to change our bias. And then finally, oil and gold. Gold settling in right now at around that 3340s. And let me see if I'm my gold capital flow chart, because that's kind of what you have to look at on gold. So there was a crazy pop here on gold the last few days, and then we had a crazy retracement, and now they probed it all the way down to the 3270s into that low volume area, and then it backed off right up here to that 3340 area. So I'm going to start range bound here. I think we have a pretty good case to make that they're going to stay in a range for a bit. If that's not the case, it'll start trading higher pretty fast. If this move to the upside, if this is just pure trading back and forth, and the net buying capital flow is still there, I think they're going to take out that 55, 60s pretty easily, and then you'll see them take out the 70s here on the upside. So to take out the 70s, just stay on the long side at that point. But initially, I'm going to start off range bound, looking for shorts against the 3354s, 59 to 60s, up to 70s, rotations back down, and looking to buy against support, not very aggressively at 47, but prefer the 35s, the 25s down to these 18s for rotations back up. So, so below 18s, leaning on the short side, above 70s, leaning on the long side. That's kind of the way I'm looking at it right now. And the interesting part with gold is really that it's moving so violently. It's hard to get a good read on the capital flow here, but it is to the upside. I mean, the capital flow is pointed higher. There's no reason to doubt that. But it's pretty freaking volatile, and it just felt the other day when it ran it up to that 3,500 level, that felt pretty overdone. That was just a that was just overdone, or like overbought, if you wish. And you can see how violent that retracement was. But trading it is a whole different story because it's so volatile. It's you get on the right side of it, unless you trade with a big stop and can fade some heat, you can get stuck in it really. You can get shaken out pretty easily. So I had a few trades where I'm just waiting for good trade location. That's kind of what you have to do. Wait for great trade location, and then take your shot. And if you're wrong, you're wrong. You're out of this trade. And if you get shaken out, and then it goes in your favor, then well, that's volatility for you. All right, so that's gold. Looking at oil, kind of holding in the range, trading back up a little bit, but not really moving a whole lot out of this range. So oil is stuck in this trading range right here, pretty obvious. They've been holding here for a few days now, back from early April. Watch this upper areas, the 64.20 to 64.50. It starts trading above that and look for potential retracement trades to the upside. And below that ledge at 58.70, look for moves to the downside. At this point, I would just fade these edges back to the mean and stay there until we get a move out of the middle, a piece of news or something which knocks it out of the range, and I would hope to the downside. I hope it's not like a geopolitical crisis which spikes oil for some reason. At this point, though, looking to sell strength, 63.20s, 63.60s, 63.80s, 90s, 64.20s for rotations back down again. 64.50s here's the last one. So looking for get short against these upper areas. I'm looking to buy against support initially, right? It's going to be against the 64.70s, 64.20s, 61.70s. Just a little bit cautious about those. If they're going to start retracing back, this is the attractor area. So going back and forth here, it's pretty. I would say it's not a lot of direction to it. So I mean, you're trying to fade edges in the middle of the range. It's not you want to kind of hold out until you get to the edges before you really start fading edges. So that came out wrong, but or kind of an odd way. But what I'm saying is that you want to fade edges when you come up to this upper area right there. That's when you want to look to get short, and you want to look to get long when you start getting down into these lower ranges. Now, if you're in the middle here, you can look for range-bound trading in a very narrow range, but just be mindful that the support areas may not be that strong. So that's what I mean. That's what I'm talking about. So right now we're at the upper end of the range. So the closest you have is for short setups against these upper areas, against the 63.20s, 63.60s, 63.90s, up to the 64.20s for rotations back down again. And if they start heading back down again towards that 61.20 attractor area, the first time to 61.20 would be probably a good opportunity for a long trade for a bounce. But it's, as you see, on the way down there, I would not be as super aggressive on it because they could just, once they start retracing it, they could just as well start swinging over to the other side of that distribution. But anyways, I'm starting off range bound. There's still buying opportunities on the way down here. Just be mindful that if you're heading lower, look for a better setup and a trigger, or you don't have to be that aggressive on a long trade. You have time to get long if they're going to stay in this little area for a range bound trading day. All right, so that's oil. So looking the range bound trading on oil. Same story with gold. And then let's see if we get anything else on the ES and NASDAQ. So back to the ES. And so we have another 5-6 minutes before we get the news, the first batch of news. As I said, I mean, it's we are right here at the gap. So either the gap's going to hold for a reverse retest, and we may see them start trading higher. We may see them start taking out the gap further and start pushing it right back down into that lower range. It's anyone's guess, given the volatility we have and the uncertainty we have got going on in the general picture of things. So I will start off range bound and then watch and see what kind of direction we get, and we know when to change our bias on it. All right, guys, we'll wrap it there. So good trading, and I'll see you back at 11:30 for the next update. You go, good trading. I'll see you back at 11:30 later.